that we have, and we are going to take up on the basis of the different organizational structure, the specific objectives behind it, the timings of it, the scope of the program, and the other different sort of categories that are associated with this uh, audit program. And we are going to see that what are the different context of this audit program. So just briefly, I'm going to give you an overview of types of audit. That we have four different types of audit on the basis of the, you may say, the organizational structure, on the basis of specific objective, on the basis of timing, and on the basis of scope. This is what we are going to cover in today's class. So talking about the organizational structure, we have government audit, statutory audit, private audit, sole proprietorship, partnership, NPO. With respect to the specific objective, we have independent audit, internal audit, cost audit, tax audit, management audit, social, secretarial, propriety, performance, environment, gender audit. Then with respect to the timing, we have continuous audit, annual audit, the interim audit, balance sheet, and with respect to the scope, we have complete, partial, and detailed audit. All right, so let's cover all of them one by one in detail in today's class. So first of all, let's talk about the general audit structure that is associated with our uh, point and consideration, that is government audit. So what government audit is all about, what are the different sort of scope, features, meanings of it. First of all, we should understand that the government audit is going to be conducted for the purpose of inspection of the accounts and financial statement of any government agency. So any government agency whose accounts and financial statement are being audited or investigated or inspected, that is called as government audit. Now these are being categorized into three broad categories. First is audit of government department, second is audit of statutory corporations, and third is the audit of government companies. So what this audit of government department is all about, basically as per the article 149, the comptroller and auditor general is required to perform those sort of duties and responsibilities that are given to that particular person, of course, by the act of the parliament. And not only that, the auditor or comptroller auditor general is responsible for the purpose of making the audit of the government department, government accounts and financial statements as per the powers vested upon him with respect to the comptroller and auditor general duties, power and conditions of service act 1971. So even in the case of government department or the government institution or the government company, a comptroller and auditor general is going to decide the frequency, the time, periodicity, and the person who are going to be audited the financial statement of the company, government company. Then the second part is audit of statutory corporations. So statutory corporation means that two sort of institution that have been set up as an special act of the parliament. So there is particularly a special legislature that has been created, like for example ICAI has been created with the special act of the parliament. Similarly, CWA, which is now named as CMA or CS, all these institutions are nothing but the example of the creation of these institution is made possible under a special act of the parliament. So when these institutions are coming under the ambit of audit of the financial statement, their financial audit is called as statutory audit or audit of statutory corporation. Then the next is audit of government companies. Now, of government companies here means that those sort of companies that is there in the context of control and operation of the state government or central government or both. The utmost condition is that in these companies, at least 51% of the paid up share capital must be held by the central government and state government or either of them. So as per the Companies Act 2013, these companies are going to be having the audit of financial statement periodically, and of course the government is going to assign the person who shall be auditing the financial statement of these concerns. So talking about the statutory audit, so what is this statutory audit? Previously we have seen that government audit. So in the case of, let's say, statutory corporation, government department or government company, when we are conducting the audit, it is going to be called as like this, government audit. Then in the case of statutory audit, what it is all about, basically a statutory audit is nothing but a kind of the audit of the financial statement or a corporation or a company as per certain sort of act which is already operating them. Like for example, the Companies Act 2013 is operating the companies that are registered and operating in India. So of course, whatever the acts, whatever the operations that are doing is being governed by the Companies Act 2013, and hence as per the law, it is compulsory under this act for them to get their accounts audited or financial statements audited from the chartered accountant. So basically, we can say that statutory audit is nothing but the audit process where it is compulsory under any sort of law, be it Companies Act, Partnership Act, LLP Act, Small Companies Act, or any other particular act as such. Talking about the main features of this statutory audit, so the owners, shareholders, members of the organization cannot make the audit optional even by their unanimous vote. So let's say even 99% shareholder or even 100% shareholders are going to say that let's we create the audit of the financial statement of our company as a voluntary act rather than a compulsory act. So it can't be done. Only a properly qualified and competent person can conduct a statutory audit. So audit can only be done by a person who is a chartered accountant and must have been obtained the certificate of practice as well. All right. Then rights, duties, and liabilities of a statutory auditor are governed by the law. So ICAI also releases code of ethics from time to time and informs them that the rights, duties, and liabilities of these statutory auditors are going to be considered while they are on the job, like they are auditing the accounts, financial statements of the company. The statutory auditor is for all purposes a representative of the owners, shareholders, or members rather than the subserves the interest of the management. That means that we know that in the case of a company, shareholders are considered as the owners. So actually, the statutory auditor is nothing but the representation, but representing the shareholders in the company, like whatever the amount of capital contributed by the shareholder in the company. The statutory auditor is going to not only keep an eye on that amount, but also going to consider this fact that whatever the amount of money contributed by the shareholder in the company is there, that must be used with the due diligence. So it's like the auditor, statutory auditor, is nothing but, let's say, a representative of these people rather than those who are managing or controlling it, like the board director, manager, managing director, CEO, etc. Then a statutory audit provides an expert opinion to the management's claim with regard to whatever the business operation, profit, financial position that management is saying. Let's say, for example, management is saying that we have earned the profit of 1 crore. So whether this profit of 1 crore has been earned by the institution or not, for the purpose of checking this fact, we are actually going to conduct this statutory audit with the help of this statutory auditor. All right. So in the case of, let's say, a trust, a compulsory, it protects the interest of beneficiaries against the possible frauds by the trustee, because it may be quite possible that in the case of a trust, the beneficiaries are going to, of course, uh, going to lose a big amount of capital, and the trustees are going to exploit the huge amount of money that may have been invested by, of course, the people for the welfare of the beneficiaries or for the betterment and development of the beneficiaries. So in order to safeguard the interest of the trustees, those who have, let's say, entrusted the amount of money in that particular trust, the statutory audit is going to be conducted. Now, in the case of cooperative societies, or you may say in those sort of organizations where there is uh, there is financial, you may say, presence of the facts and figures, or you may say that the financial aspect is being taken up, or financial statements are being prepared for the purpose of estimating the profit or loss at the end of a certain time period. So this statutory audit is conducted for the same as well. Now, in the case of public sector enterprises, it again helps to protect the interest of public against the defalcation and the scams, or any sort of, let's say, the wrong charges that may have been framed against the management as well, or by the public in general. Private audit. Now, what this private audit is all about? So, those institutions that are neither covered under the category of government company nor covered under that statutory audit case, these are going to be covered here in the case of private audit. So let's say, for example, if I talk about the sole proprietorship, joint one to family firms, partnership, club, audit. Now, for them, these are for them the audit is not compulsory under any such law. So if you are running or maintaining a sole proprietorship, audit is not compulsory. If you are running a joint in the family business or partnership, or running a club, it is not compulsory as per the act in which it has been governed. But of course, it's not like that they will not be covered under the ambit of this audit if that business or institution is exceeding certain sort of turnover or sales value or the profit. Then of course it becomes compulsory for them to get their accounts audited. Like for example, for a business firm, when the gross turnover exceeds 40 lakh, the audit of financial statement has to be done. In the case of professionals, that when the gross receipts exceeds 10 lakh rupees, of course your financial statements are going to be audited. Now, what are the different sort of features of the private audit? The first and foremost is that the client is going to decide the nature and scope of audit. So what is the nature of the audit? What is the scope of the audit? This is what we are able to decide as a client, because we are having the authority to whom we should get our accounts audited, and from whom we should hire for the same purpose. Then talking about the qualification, of the auditor. So of course the auditors are not legally prescribed. So it's not like that the chartered accountant or the when you are conducting the private audit, so of course the person must have been obtained the degree of ICAI. It may be like something like, let's say for example, initially you are conducting a private audit whereby you know certain sort of the person who is having the degree or authenticity from the ICAI is getting the accounts and financial audited of the particular concern. All right. Now, so what we are able to understand that the qualification of the auditor are not legally prescribed. So it's not being said that the person must be must have been obtained the degree of chartered accountancy, or must have obtained, let's say for example, the degree of BCom honors or MCom. It is not actually mentioned. The audit may be partial in some respect. Partial in some respect means that when you are conducting the audit, let's say when you want to get your accounts audited only 70% rather than the 100%, so 30% of the things can be skipped. And what we are able to understand is that with respect to this 30% work, you can carry forward your activities, you can carry on your activities, although it is not at all like this in the case of the government audit or statutory audit, but this can happen in the case of private audit. Then the client decides the rights, duties, and liabilities of the auditor also. So let's say I am hiring somebody to audit my financial statement, and let's say, for example, if the person is going to be hired by me, so I am going to decide the duty that shall be performed by the person, the liabilities, the rights, the privileges, the responsibilities. Although in the case of a government audit, or in the case of, let's say, the government audit or statutory audit, this is not the case actually. All right, so the client decides the rights, duties, and liabilities of the auditor. Talking about the main advantage of the private audit, so what are they? Basically, it provides a reliable index of profitability. So management is saying, let's say I have earned 1 crore rupees of profit. Whether this 1 crore rupees of profit is actually materialized or not, for that matter, for that purpose, we are going to see that the profit earned by us is actually worth 1 crore or not, with the help of getting our accounts and financial statements audited. All right. Then it provides as an assurance to the owners that business accounts are properly maintained and these are free from errors and frauds. All right. Then it serves as a reliable basis for assessment of taxes under Income Tax Act, Wealth Tax, Sales Tax, and other laws. Because if you have not got your accounts and financial statement audited or reassessed with respect to the auditor, so you can't file for the income tax return, wealth tax, or whatever the sales tax value that you are reporting or paying. This is not going to become a valid amount. All right. Then loans from banks and financial institutions can be raised easily with the help of audited accounts and statements. This is what we are able to understand. Right. Now, the next is on the basis of specific objective, what we are able to understand. This is the basically second pillar, and the second pillar is stating or saying that on the basis of specific objective, what can be the categories of audit. So the first is independent audit. So what this independent audit is all about? So independent audit means that the audit whereby a professionally qualified person and a competent auditor is going to be auditing the financial statements and account of the client company. So independent audit means that I am actually a chartered accountant and I have got the certificate of practice, and I am auditing the financial statements or accounts of a particular company on the request, of course, of the client as such. So when I am conducting the audit, this sort of example of the audit can be considered as an independent audit. So the objective of this independent audit is to check the truthfulness, fairness, correctness, accuracy of the financial statements that I have prepared, and we are going to verify that these statements are in conformity with the generally accepted accounting principles and the legal requirements that are there. All right. Then only an auditor is having the independent status can conduct an objective and impartial examination. Because if you are biased, if you are having, let's say, some sort of share in the company, if you are there in the management of the company, then you cannot perform this uh, impartial audit or independent audit. So you must be free from any sort of, let's say, the clash of interest. You must be free from any sort of responsibility or any sort of benefit that you are going to get from the company when you are going to, of course, satisfy the management with a positive report, even if there is certain sort of negativity in the financial statement of the company. All right. Then the next is internal audit. Now, what internal audit is all about? So, in the case of internal audit, we can say that internal audit is something whereby the company's employees are going to thorough examine the accounts and financial statement, and that too on a regular basis. So, it's not like this that I have been hired to audit the accounts and financial statement of a company for the first time or for a specific period of time. Rather, I am going to audit the accounts and financial statement of a company on a regular basis. All right. And I am the employee of the company as well. So you would say that you have just mentioned about the independent audit. Now you are talking about the employee checking or examining the financial statement. So internal audit is something that is to ensure the fact that whatever the accounts and financial statement I have prepared, that is correct to the best of my knowledge, all right, or to the best of the efforts that has been put in by the employees of the company or accountant of the company. Now, when the independent auditor or the external auditor is going to conduct the audit, it will become very much helpful for that external auditor to audit the accounts and financial statement in the purview or perspective of the scenario whereby I will be having, of course, less time to recalculate or recheck those items that already internal auditor has done. So, of course, the thorough examination is going to be done by the company's employee as well. But if, let's say, sometimes if the internal auditor is not available, or let's say there is no internal auditor, so company can also hire the services of outside agency, and these people can audit our accounts and financial statements as well. All right. But one thing is to be noted here, that the internal audit is not compulsory. Internal audit has not been compulsory at all. All right. So companies auditors report order 2013 although requires the auditor of specified company to report that its internal audit is in place and appropriate functioning in view of the nature and size of such a company. So this is what we are able to understand from the perspective of the internal audit. All right. Now, let's understand the difference between the internal audit and external audit. What is the difference between these two, and what are the different dimensions on the basis of which we can make a difference? So first and foremost is scope. It's talking about internal audit. Scope is decided by the management. It is the management who is going to decide what is to be audited, what not to be audited. Let's say, for example, the management is saying that the internal auditor must audit the financial statement, but cash flow statement should be skipped. So of course the internal auditor cannot do so. Internal auditor cannot audit the cash flow statement on his or her own. The internal auditor cannot audit the cash flow statement on the basis of his or her own wish or desire. Whatever the management is saying, the internal auditor has to do that. Of course, the management is not going to say to manipulate the accounts and financial statement, but the management is going to dictate the scope of the audit. All right. So generally it includes review and appraisal of accounting, financial and administrative controls. Okay. Then talking about the external control, external audit. So the scope is basically decided by law or by the contract with the auditor. It's not like, let's say, the management is saying that you just go and check the trading account, profit and loss account and balance sheet, and don't go and check the ratio or cash flow statement, fund flow statement. It's not like this. If the law is saying that I being the external auditor, I'm supposed to, let's say, audit the financial statement, ratio analysis, fund flow statement, cash flow statement. So I am going to do it for sure, because I am doing my job as per the law. Whatever law is saying, whatever law is dictating to me. All right. Then talking about the status and remuneration. So internal auditor generally is an employee of the company, and the person is paid salary for this work, because the internal auditor is continuously auditing throughout the year. And apart from, let's say, sometimes the internal auditor is the accountant also, so he is preparing the accounts, he is auditing the financial statement as well. So he is preparing the accounts, he is auditing the financial statement as well, and he is paid salary for that same work. Now talking about the external auditor, so an external auditor is going to get fees, not the salary. Salary is paid to those sort of people to whom we have more degree of control. Let's say if I am an employee of a company, so whatever company is telling to me to do so, I'll be doing it. But if I am giving my professional services as an independent auditor, so I am going to decide what is to be done, and in lieu of that service, or in exchange of that service, I'll be getting fees for the professional services that I am rendering. So since I am working as an independent person, so of course I'm not going to get the salary. All right. Now talking about the legal status, so it is not compulsory under any law. It is not at all compulsory under any law. But talking about the external auditor, it is compulsory under the law. It is compulsory under the law. All right. Talking about the main concern or approach, what it is. So the main concern here in the internal audit is to ensure compliance with company's policies, rules and procedures, the good business practices, generally accepted accounting principles, and the legal and government regulation must be compliant or must be ensured. And that's why we are involved in this internal audit system. All right. Otherwise, even if we are not doing this, let's say, internal audit, even if we are not engaged in this internal audit system or business, that is perfectly fine for us. Now, if of course law is not going to make it mandatory for us, or to, let's say, follow some certain sort of compliance guideline. But in the case of external audit, here the main concern is to collect the adequate and reliable evidence to support his opinion as to the truth and fairness of the financial statement. So what is the reality behind that? What is the main concern that is associated with respect to that, let's say, with respect to that audit, that is to be kept in our central place. We are always considered about this fact and figure that the external audit must be conducted for all those items, for all those institutions whereby it is compulsory under the law. All right. Talking about the responsibility, so the responsibility of the internal auditor is towards the management of the company. So internal auditor is responsible, or you may say accountable, to the management of the company, whereas the external auditor is directly responsible to shareholder, or even in third parties in some cases. So it's not like this, that the external auditor is going to be responsible or accountable to the, let's say, the board of director of the company. It's not. They are not. They are responsible to the shareholders and the third parties. All right. Next. Next is cost audit. Now, what this cost audit is all about. So if I talk about the definition of this cost audit as per the Institute of Cost and Work Accountant of England, they said that the cost audit is the verification of correctness of cost account and of adherence to cost accounting plans and procedures. That means whatever the, you may say, whatever the activity in which you are engaged, if it is associated with the estimation of cost or accounting of the cost, or let's say cost planning, so of course you are supposed to go through this cost audit as well. Generally, this cost audit happens in those sort of companies or institutions whereby the manufacturing activities are being done, or let's say some sort of activities are being happening whereby goods and services are being produced regularly or over the period of time. So only those institutions who are having this sort of nature or this sort of characteristic, they are going to be covered under the ambit of this particular, you may say, this cost audit. So why it has been done, what is the objective behind this, let's get to know about it. So in order to ensure that cost accounts are properly maintained, we are going to conduct this cost audit. So cost audit coverage, or the cost audit scope or objective has always been to ensure cost accounts are properly maintained. Then we talk about the arithmetical accuracy of cost accounts. So what is this arithmetical accuracy of cost account? Basically, with respect to the arithmetical accuracy, we say that whatever the calculation that we have done, let's say if I am adding certain sort of values, let's say 5,000 plus 5,000 or 5,000 minus 2,000 or something like this. So of course, we are going to take up this arithmetical accuracy of the cost account. Then we have detection and prevention of errors and frauds. Now, what is this detection and prevention of errors and frauds? So, with respect to the detection and prevention of errors and frauds, we can say that we are always interested in estimating the accounts and financial statements from the cost perspective, but we are also at the same time interested in locating the errors and frauds from the perspective of this cost accounting. All right. Then the next point is utility of cost accounts for management decisions. So what is this management decision or utility? Basically, whatever the cost accounts we have prepared, it is of no use to the management if we are not going to get our accounts audited, or if we are not going to make it presentable or as an authentic information to the management of the company. Because of course, until unless our informations are not authentic, how I am able to ensure this fact that whatever the values that are being reflected here in the case of this cost statement or cost sheet, these are relied upon easily, these are reliable easily for the management. So in order to make the values more reliable, in order to make the cost accounts serve a utility to the management decision, the cost audit is to be ensured or is to be conducted. All right. Then the next point is tax audit. Now what this tax audit is all about? So there is always a difference between profits reported to the shareholders and profits reported to the tax authorities. So what is this profit reported to shareholder and profit reported to tax authorities? So basically, with respect to the profits reported to shareholder and profit reported to tax authorities, that, let's say for example, shareholders have been informed that we have earned the profit of rupees 1 crore, and the tax authorities have informed that we have earned 50 lakh rupees of profit only. That means there is always a two different sort of figures of profit. One is for shareholders, one is for tax authorities. Why we are showing less profit to tax authorities? Because we want to decrease our tax liability. We want to make it less as a tax liability, so that we can pay the taxes less or we can evade the taxes. So this is done intentionally. But in order to ensure accuracy of the taxable profit, that if the company is saying 50 lakh rupees of taxable profit we have earned, so whether that is correct or not, in order to ensure this fact, this tax audit is conducted. So the very basic purpose of this tax audit is to ensure that the tax liability of the company that we are going to compute or calculate, that must be calculated properly, and there should not be any sort of deviation with respect to the actual amount of profit that the company has earned and the book profit that the company is showing or reporting to the tax authorities. So there are two big objectives behind this tax audit. The first is to assess the correctness of the calculation of taxable profit. So whatever the taxable profit we are saying that we have earned, we are going to assess it, we are going to check the correctness of that figure. And then next is to ensure fulfillment of conditions for claiming deduction. So conditions of claiming deduction means that, let's say for example, you are saying that you need to claim the depreciation, unabsorbed depreciation, or let's say for example you want to claim the capital loss for the next year. So you can only and only carry forward this capital loss in your income tax return in the next year if you have got your accounts and financial statements audited from the tax audit perspective. If it has not been audited, if the tax audit has not been conducted, then of course your data would not be reliable, and hence you can't be able to claim the deductions. All right. Then the next is management audit. Now, what management audit is all about? So basically, in the case of management audit, we can say that the management audit is nothing but a comprehensive and critical evaluation of all aspects of the management, which is going to check whether the different policies, principles, rules, regulations that we have adopted or that we have, let's say, installed in our company, that are actually serving the very basic purpose of that management audit or not. Like for, let's say for example, we are saying that the uh, let's say a unity of command should be adopted, or unity of direction should be adopted, or let's say decentralization of authority should be adopted, or in the case of communication, the scalar chain can be adopted. So in that matter, we can say that whatever the principles of management are there, whether we have adopted all those principles of management in a more thorough manner or not, whether we have been able to successfully create the installation of all those principles in our management policies or our management objectives or actions or not, this is what we are able to check with the help of management audit. Okay. So it is done to examine various policies and actions of management on the basis of course, the SAD standards, like the principles that is given by Henry Fayol, or the principles that is given us by the, let's say, the F.W. Taylor, and so on. All right. Now, talking about further with respect to the management audit, so we can say that it goes beyond the conventional audit, whereby only the accounts and financial statements are going to be scrutinized or emphasized or checked. Rather, we are going to check the management policies, management principles, management rules, and management ethics or practices, etc. All right. Then the next is social audit. Now, what social audit is all about? So social audit is concerned with examining the social performance of the company. That is, whether the company is fulfilling the responsibility towards its employees and society as a whole or not. Let's say, for example, provision for general health services is nothing but a kind of an example of social welfare or the social performance of the company. The company must instill in its, you may say, the environment or in its company's perspective. So social audit is basically conducted for the purpose of checking the fact that whether the social performance of the company is going to be, you may say, going to be good enough from the perspective of making it more socially uh, active or socially responsible company or not. So creating a provision of good healthcare services, creating a provision of good infrastructure to work, or creating a healthy work environment is one of the social performance dimension of the company that is being checked with the help of social audit. Then we have secretarial audit. So what secretarial audit is all about? So when the secretarial audit is conducted, it is conducted for the purpose of checking that whether the provisions of Companies Act 2013 has been complied or not. It is going to be conducted to ensure whether the working of the company is in accordance with the provisions of Companies Act 2013 or not. So let's say, for example, as per the Companies Act 2013, the companies are supposed to conduct AGM, all right, and once in a year, or let's say 15 once in a 15-month period. Now, for example, let's say the institution is not conducting the AGM. So in that case, what is going to be happening is that we can say that the secretarial audit is going to verify this fact that once in 15 months the AGM is not being held, and of course you can say that the company is now responsible for this particular point, or for the purpose of not following this rule as per the or in accordance with the Companies Act 2013. So this audit is conducted to ensure the compliance of all the legal requirements like filing of statutory declaration or certificates of the certificates with the registrar of the company. So certificates of importance like sending the notices or sending the termination letters or something like this. You are not sending to anybody, and you are, let's say for example, terminating somebody without even assigning the reason, or without even giving the notice period, or without even giving the, let's say, the notice in writing or termination letter in writing that you have been terminated or your services have been terminated. All right. So this is what we are able to understand from the perspective of statutory audit. Now the next is proprietary audit. Now what this proprietary audit is all about? So basically proprietary audit may be defined as the audit concerning with the decisions of executives with an emphasis on public interest, financial discipline, and why we are doing it? Basically, in order to satisfy the fact that whatever the decisions that we have taken as a proprietor, these are within the framework of the, let's say, the rights and the freedom that is assigned or given to us under an act of, let's say, a certain sort of act, or under a specific act under which our business is being governed. So let's say for example, if I talk about the partnership firm, so in the case of partnership firm we have two different sort of law, let's say the Partnership Act as well as the limited liability partnership. So whether we are following the different types of, let's say, the rule, regulation, or the rights or responsibilities or duties or life or or freedom that is given to us, of course, by that act. So this is what we are able to check, or what we are able to, let's say, see and observe, that is it good that we are in a situation to conduct all these sort of activities within the law, or whether any act that I am doing is going beyond the provisions of the law that is governing my business. All right. So this is what proprietary audit is all about. So what else I can say is that it is basically again to advise the executives either in preventing or reducing the losses and increasing productivity or improving performance by timely reporting these matters. Right. Then the next is performance audit. Now, what performance audit is all about? So, performance audit is basically involved in judging the efficiency with which business activities are being carried out. So that means we are going to estimate the, let's say, goods and services cost, time involved in it, and the efforts that we are putting in for the purpose of creating a product out of an activity. So when our product is produced within the benchmark time or within the set standard time, we can say that we are on the right path, and we are good to go. There is absolutely no problem at all. But when we are in a critical situation, whereby, let's say, for example, you are in a situation to, of course, see that the standard time that should be taken to produce a commodity is 1 hour, and the actual time that you are taking is 2 hours. That means extra 1 hour of time you are taking here. So this extra 1 hour can be checked with the help of performance audit, that whether the time that you have taken extra is justified or not, or you are just wasting the here time actually. All right. So a performance audit involves judging the efficiency with which business activities are being carried out. So several persons in an enterprise perform various activities in order to ensure effective internal control is applied or lied, and we are going to ensure this fact that we are in a situation to control the whole business or affair of the organization in a very efficient manner. All right. So for example, in order to ensure control over cash disbursement, all activities in the purchase procedure are closely monitored, and the purchase requisition, purchase order, purchase invoices, goods received memo, etc. are such sort of activities. So a critical review of the time, cost, etc. involved in each of these activities is called as performance audit. So this is what we are able to understand from the perspective of this performance audit, that when we are judging the efficiency of the business with respect to a certain sort of activity, with respect to a certain sort of, let's say, the certain sort of a role or certain sort of responsibility that is assigned by the organization to an employee for the purpose of producing the goods and services. So in that aspect, we can say that, of course, it's our responsibility and duty to effectively work on the development of the product on time, as well as producing the goods and services qualitatively as well. All right. Next is environmental audit. Now, what this environment audit is all about? So again, environment audit is again a type of a audit um, whereby the environment is kept into the central place. So the environmental audit is a type of evaluation which is created in order to identify the environmental compliance and the management system implementation gaps. So what are the environmental compliances that we have? and the management system implementation gap that we have as well. So along with the related corrective action, we are going to perform the activities as an analogous or similar function to the financial audits. So whatever the activities that we are performing, whatever the act that we are doing, whatever the, you may say, the role and responsibility in which we are engaged, we are always considering this facts and figure that the environment must not be hampered, environment must be protected, and the corrective action could be taken for the purpose of implementation of the good environment, and we should not damage the environment actually. So it is concerned with assessing companies' performance towards safeguarding the environment. So let's say, for example, if you are polluting the environment by, let's say, dumping your chemical waste in the rivers or in small ponds, which is of course nearby your uh, manufacturing hub or nearby your factory. So this can be considered as an example of this, you may say, the environmental audit, because of which this, of course, environmental audit is being conducted. All right. Next is gender audit. Now, what this gender audit is all about? So, in the case of gender audit, basically what we are able to see is we are trying to measure the gender equality into the organization, not only for the sake of name, but also for the sake of implementing the policies, running the programs, running the projects, creating the provisions of the services, the structure, procedure, everything that is going to make it fair enough to for both the genders, that is being a male or a female. We are going to check it out and estimate this fact and figure that, of course, the rules, regulations, programs, policy, procedure, whatever we have estimated, whatever we have conducted, this is going to be, of course, continuing or going to be estimated or counted as, let's say, the gender equality perspective. So a gender audit is a tool to assess and check the institutionalization of gender equality. That is a bigger perspective with regard to elimination of the gender biasness, like you are paying more salary to male but less salary to female. This is a gender bias. Or let's say you are giving good projects or higher positions in the projects to male gender only, but you are ignoring the females. So this is what gender audit or gender biasness is actually uh, coming into the picture. So the provision of services, structure, proceedings, and budgets, these are going to be considered under this gender audit. And we are, of course, knowing this facts and figure that the gender itself has been now a big issue. Even there are many NGOs that are working on this area of removing this gender biasness. And for that purpose, even in the companies, this gender audit is conducted. So it allows the organization to set their own house in order and change aspects of organizational culture which discriminate against the women staff and women beneficiary. So we should protect the interest of the women's, we should empower them, we should provide them enough space and a good environment so that they are in a position to make themselves grow and prosper in a very conducive and a positive environment. So this is, you may say, one of the basic premises or the basic reason because of which this gender audit is conducted. All right. Now, about the third aspect, that is on the basis of time limit. Now, what is this on the basis of time limit? So on the basis of time limit, we have again the different categories of the audit. Let's do it one by one. So I'll be first of all talking about the continuous audit. Otherwise, we have periodical audit, annual audit, final audit, interim audit, balance sheet audit. So let's focus on this element right now. So on the basis of the time limit, we have the continuous audit first in place. Now, what continuous audit is all about? So, in the words of Spicer and Piegler, a continuous audit is one where the authority auditor's staff is occupied continuously on the accounts of the whole year, or where the auditor attends at interval, fixed or otherwise, during the currency of the financial year and performs an interim audit. Such audits are adopted where the work involved is considerable and have many points in their favor, although they are subjected to certain disadvantage. So I may not be assuming this fact that you all must be able to understand a lot about this continuous audit with the definition that Spicer and Piegler has given. So what this continuous audit is all about? Continuous audit is something that is going to be done or going to be conducted throughout the year. Now, who is actually conducting this? So, with respect to the continuous audit, I would say that those institutions that are engaged in those activities whereby thousands and thousands of transactions are happening throughout the year. So, it is not at all possible for an auditor in general to, let's say, for example, audit the accounts and financial statement in just 3 hours, or in just 3 days, or in just 3 months, or in just 6 months. So it took a whole year to you not only to prepare the financial statement, but also cautiously prepare all those sort of each and every piece of instrument of financial statement. So how we can assume that the auditor, being an independent person, will be able to manage this work in just 1 month, 2 months, or 3 months? It is not at all possible for the auditor to conduct this activity in just few months. So for that purpose, we need not only the many more helping hands, but we also need the different people of the different stream, different mind, different perspective, different thought process, and different, you may say, the capacity and capabilities too. All right. So let's say, for example, when we are conducting the audit, so we came to know that there is a sales transaction of 2000 people in a one single day. So is it possible for me to check all these 2000 sales voucher, that whether these sales voucher are correct or not, whether these sales voucher are fake or not? So of course it is not at all possible for me, because it's only about 1 day sale. Forget about even the 365 days sale value. So if I estimate 365 days sales value or sales voucher, so just multiply 365 with 5000. So it's going to be a huge figure. So what we are able to understand in this scenario, that the continuous audit is conducted for the purpose of keeping this perspective clear, that whatever the activities we have done throughout the year, whatever the accounts and functions we have prepared, or whatever the invoices that we have prepared throughout the year, these are authentic, these are genuine, and we did not involve in any sort of manipulative activities. Because at the end of the year, estimating 1 million invoices is big enough task, but on an average daily, if I estimate, let's say, for example, 3000 invoices or 5000 invoices randomly, so of course it is possible for me to investigate these small number of invoices. So what we do in the case of continuous audit, that in the case of a continuous audit, we are always interested in continuously auditing the accounts and financial statement throughout the year. So instead of, let's say, as an external auditor, we are going to, let's say, audit the accounts and financial statement only at the end of the year. Rather than that, we are going to audit the accounts and financial statement throughout the year. So one of the biggest benefit that we are able to get is that we are in a situation to, let's say, estimate all those invoices, checking the truthfulness and correctness and fairness of all those invoices. And apart from that, checking this point also, whether the invoices that we have created or the bills that we have prepared is correct or not, whether the